Next question. What happened at the New York Stock Exchange? Why would specific stocks have too much activity? So for those who didn't see this yesterday morning, there was a trading halt in a number of stocks at the New York Stock Exchange. And let's talk first about kind of what a trading halt is and why it happens. And then I'll second talk to kind of what allegedly happened yesterday. So trading halts happen not all the time, but they're not like super infrequent in individual names at exchanges. And essentially what a trading halt is when suddenly there is a flurry of activity in a stock or maybe a significant amount of volatility, and it's made it where the exchange can't effectively in real time match buyers and sellers. And so what might happen is they'll say, hey, we're going to put a pause on this for a second. That allows them to match all the incoming orders that are coming in and provide a more stable and efficient market. So rather than the stock tanking or trades not getting matched effectively, they call for a pause, and it's usually, it can be anywhere from half an hour to a couple hours for them to kind of clear the books, essentially. So think of an exchange as, now this is mostly done electronically, but it literally used to be a person having to physically do this on the exchange floor. But even computers have limitations too, right? Like obviously the volume of what can match in trades is much greater with a computer than with like an actual human. But it's, I think, easier to understand when you think of it in terms of a human. Imagine like I'm the person taking in the orders and then trying to match the orders on the other side. And if suddenly that volume increases a lot, you could see where that could create some chaos. And that's not going to create the most efficient pricing, and people's trades aren't going to be executed in the most efficient or best manner, which is the purpose of an exchange or a marketplace. So they put a pause on it in order to kind of clear everything out. And then when the market, when trading resumes, it is less volatile, more efficient, more price certainty, things like that. So when do halts tend to happen? They can happen when there is like a big news release, for example, that is unexpected or unanticipated, and there might be a flurry of activity. So rather than like the stock tanking like 20% at the open or something like that, they might delay and they don't do this like across the whole market, right? They'll do this like in the specific name impacted. Sometimes these things happen because with electronic trading systems at various hedge funds, maybe the term we use in finance is like fat fingered. Like maybe somebody accidentally added an extra zero on a trade when really, they meant to buy 2,000 shares and instead they're buying 200,000 shares or something like that. So sometimes those halts are able to catch and detect and alleviate kind of like aberrant behavior in situations like that. So that's what a halt is and what its purpose is. So now what happened yesterday? Based on what I've read, it sounds like, so you've heard that there's like pre-market and aftermarket trading. Some banks will facilitate that. When you hear like the news talk about like, oh, futures are doing this or the market is expected to open down, it's because there is some, but much lighter trading volume ahead of the market open and after the market close. And that gives some indication of where the market is headed. It also will queue orders up in the system, right? So like if you go to Fidelity and you want to buy Google stock and you want to buy it after the market closes, you can submit that order as a market order, and that's in the book to be executed when the market opens the next day. So the market is queuing up these orders before the market opens. And it sounds like what happened is usually they get ready by kind of matching all those up before the market opens for the day, and something happened where that didn't happen. And so it created this big volume right at the open that caused some issues. And so it affected like 200 names. And so they called a halt on those 200 names, and it sounds like things opened up in those names by about 9:45, so a little bit late. I'm not entirely sure like why the pre-market procedures that were supposed to happen didn't happen. I haven't seen kind of any more detail as to that, but that is basically what I read and could kind of glean from the different stories I saw about what happened. It's all technology based. Technology has glitches all the time. Like, this morning there's a headline about Google having outages worldwide in various of its products. Like, these things happen. Humans ultimately are behind like maintenance and upgrades and things like that. Humans make mistakes too. So I'm sure we'll learn more in the next day or so as to like exactly potentially what transpired, or maybe we won't, but it's, that's why it happened, they're saying. So I don't know if that answers your question. I hope it helps a little bit. What I would say is that trading halts in and of themselves are not super unusual. They're usually more limited to a single name or a handful of names in a given sector. Sometimes when there's like big news breaks and things like that. So it is a little unusual for it to happen like across 200 names. But a halt in and of itself isn't unusual. And the ultimate goal is to have the most efficient market and like execute your trades most efficiently. So that's kind of what went on and what happened. So I hope that gives some background there.